Today we want to dwell on trend lines. We want to learn about trend lines. We want to do a masterclass on trend lines. So my name is Progress and I've been trading for at least 4 years now. This will be my 4th year trading and I've had my fair share of losses and I've had my awesome share of wins. So I want to teach you how to trade. I want to teach you how to master trading using different concepts, and you will have to choose the concept that you'd want to dwell on and master so that you also can have passive income. You also can have an online income that is able to set you free financially so that you can be financially independent and be able to quit your full-time job at the moment and be able to be your own boss and have the luxurious lifestyle that you want. So with that being said, this trading masterclass is for those who are serious and for those who really want to learn, because this will not be a one-day event whereby you just learn this today and you become profitable by tomorrow morning. No, this is something that you have to practice at. Like I also practiced, like I also took the time to actually learn these concepts until I moved away from trading losses, blowing my accounts, to being profitable. So this is a strategy that you can also employ in your trading plan so that you also can maximize your profits. So let's begin our masterclass, shall we? Today, let's master knowledge about trend lines. So why would we want to know about trend lines? Trend lines are crucial to our trading strategy. They're also crucial to us mapping a way where we want to be profitable trading online. So we can use trend lines to trade the market. We can use trend lines to enter and exit the market profitably. So this is why we want to delve deeper about trend lines, because they will assist us in being profitable. So let's get. A trend line is a line drawn on your price chart pattern connecting a series of highs for a downtrend or a series of lows if it's an uptrend. There are two different types of trend lines. It's either it's a bullish trend line where it's connecting price points that reveal an upward turn of the market or an upward direction of the market, or a trend line can be bearish, which is a downtrending trend line which connects price points that reveal a downtrending market structure. Trend lines define your market structure. They define your market, whether it's bearish or whether it's bullish, otherwise known as a buying market. A bearish market is known as a selling market, a downtrending market. So you'll find out that trend lines will reveal that market structure. So they can be used to define your market structure, because a market structure can either be trending, or it can be sideways, or it can be sideways or ranging, or it can be noisy. So trend lines are used to define the type of market structure that is known as a trending market structure, which can be bullish if your trend is going upwards, if your price is buying consecutively, or your trend can be bearish. This will be a selling market structure which will have a trend line which is facing downwards. So that is the purpose of a trend line, to define your market structure. Since your trend lines define your market structure, they show us the direction of the market. In essence, that's defining the market structure, that's defining the trend. This means that trend lines can be used to enter and to exit the market. Of course, you can't use them on their own, but you'll have to use them with other confluencing factors for you to confirm your trade entry or your trade exit. So this is one of the uses. This is one of the more crucial uses of trend lines. So this is what you will use your trend lines for, to enter and exit the market, hopefully profitably. Now we want to learn how to draw a trend line and also how to use it to enter and exit the market. As you can see on that structure, on that chart pattern, for you to draw a trend line, you have to first of all visibly look at your chart pattern and see if you can see any points that you can actually join, like the ones that I'm seeing on that you're also seeing on that chart pattern. So we'll join this point and that point. then use the third entry point as our trendline entry point. So let's draw, shall we? We join those lines together. Then the third entry point is where we will time for our entries. So before the price gets to that point where it touches the trend line, we wait until it gets there. And when it gets there, we look for other confluence factors like, is it a support or is it a resistance zone? Also, we look for candlestick rejecting patterns like dojis, like bullish engulfing, like spinning tops, double bottoms or double tops, whichever may be present, or railway tracks. We look for any candlestick rejecting patterns like that one there. So when we look for those rejecting patterns, we then time our entries after the pattern is defined, like in that case there. So what you then do is you then place your entry just after the close of the candlestick. That will be a conservative entry. If you are aggressive, you'll just enter the minute the price touches the candlestick, the price touches the trend line. But one of the things that will happen if you're an aggressive trader, yes, you might enter after the price touches the trend line, but one of the things that you'll see is that price may continue going up as a manipulation strategy from the broker, and then it might play around that area until it goes back down. So if you do not steady your nerves, if you're not patient enough, or if you do not practice proper risk management, you'll blow your account right there. If you do not wait for a proper rejection candle that also confirms your entry. So you choose whether you're a conservative trader or you're an aggressive one and enter the market. So how you get to exit, as the price goes down, like in the structure, when it touches the bottom end of the pattern, when it touches the bottom end of the other side of the trend line, where you see that mark there, that's where you get to exit. As soon as it touches, you can actually come out of the market, or you can close some trades, then trail with a stop loss so that you do not lose all of your trades. Because at times when the price gets to the other end and touches the trend line, at times it just goes back up with no mercy. So you like to choose whether you want to close all of them or you want to close some and leave some and follow with a stop loss. Like I said, you can use trend lines to enter and exit the market. Thus, we can term your strategy a trend line trading strategy, where you use trend lines to time your entries and trend lines to time your exits. So you can either be an aggressive or a conservative trader. An aggressive trader just enters as soon as the market price touches the trend line, and as soon as the market price touches the other side of the trend line, aggressive traders exit the market because they would have had their fair share of profits, and they are aggressive traders. So they enter when price touches and exit when price touches the trend line. If you're a conservative trader, now you'll have to look for support or resistance zones. You'll have to look for other confluence factors like candlestick rejecting patterns or any other patterns that might present themselves. You can look for candlestick patterns like dojis, like bearish engulfing patterns, like double tops, like double bottoms, spinning tops, whichever candlestick pattern that you're used to trading. Evening star, morning star, choose your pick. Railway tracks, whichever candlestick pattern presents itself. You look for that and also look for a touch on the trend line and also look for support or resistance so that you have at least 3 or 4 confluencing factors that define your confirmation entry. So don't just enter the market. If you're a conservative trader, you have to look for other confluencers. So like I said, you'll choose which type of trader you are. In this case, you wait for the price to break out and it retraces back to the trend line. And when it retraces back and touches the trend line, that's where you look for your confirmation entries. Again, look for candlestick rejection patterns, look for support, look for resistance, look for whatever it is that can give you a confluential entry point that can confirm that you can enter the market. Then you place your trades. That's it about our masterclass. So remember to practice using trend lines, and remember to backtest the market, and remember that you use your demo trading account and not your real life trading account, so that you do not lose your hard-earned cash. And when you feel like you're ready to trade this on your live trading account, you can do so, but practice proper risk management so that you do not lose your hard-earned cash. Until next time, like, subscribe, and share, and keep coming back to this video so that you learn, so that you practice, because I want you to make money online.